there, and welcome to another edition of Retirement Your Way. Matt McClure here with you, but I'm just the guy who pushes the buttons and makes the sounds happen and directs a little traffic. That's really my job. The guy who does the heavy lifting each and every time we get together is Bradley Hardin with AmeriLife of Central Florida. Hey there, Bradley. How's it going?
I'm doing well, Matt. How are you?
I'm doing very well. I cannot complain, but even if I could complain, I wouldn't, because it wouldn't do any good.
I agree. Who's listening anyway?
Right, exactly. Well, speaking of who's listening, thank you for listening to the show out there, whether you are listening to the podcast, and you can subscribe wherever you get your podcasts, by the way. That is, Apple, Spotify, iHeart, all the biggies there, and some of the littlies too. You can subscribe to Retirement Your Way. Just search for the name of the show, or whether you're listening to us on the radio in coastal Florida, right around the Daytona Beach, Volusia County. We've got, New Smyrna Beach, Ormond Beach, all the beaches. We got all the lovely beaches of the area covered, and inland as well. That's because that's how radio signals work. But we really appreciate you listening wherever you are listening. And as the show goes along, we're going to share this throughout the show, but I want you to keep this in mind. If anything we talk about today sort of piques your interest or kind of lights a fire under you a little bit, saying, oh, look, I need to make sure that I have an income plan for my retirement, because that's really what the name of the game is, especially here today on the show. And we'll get to the meat of it here in a second. But I want you to reach out to Bradley and his wife, Madison. They are available via the phone or via the website. So you can go to planretirementyourway.com. That's planretirementyourway.com. Fill out the form, get a free consultation. It's free of any cost or any obligation whatsoever. Or you can give them a call, 386-320-6406. That's 386-320-6406. All right. So Bradley, I mentioned it a little bit there, but we're going to talk a lot about income today. And it's, I think, one really useful income tool in retirement, especially.
Yeah, absolutely, Matt. And I do appreciate the kickoff there and kind of getting the show rolling. And I'm very looking forward to this topic today, because I'm sure you listeners out there have heard of the word. You may not know what it is or how it works, or you may have seen advertisements against it. But we're going to be talking about annuities today. And really, we're going to go through the ins, the outs, and the fine print. Because, it's one of the most utilized income planning tools in retirement. And it's something that you should know and learn and feel comfortable with and understand. Because like I said, I've seen campaigns and people getting on the web or the TV that says, beware of annuities, and never, if you're thinking of buying an annuity, call me. And it's just, I just disagree with that. So, I'm looking forward to explaining a little bit more in detail today, guys, the ins, the outs, and the fine print. And one of the things that we are offering for those folks that are listening is a complimentary annuity checkup. So whether you have one, whether you've heard about them, or whether you simply just want a little bit more information, again, we're going to be providing those complimentary annuity checkups for you. Now, what we do is when we have people come in, Matt, I can't tell you how many times somebody brings in an annuity statement and says, I bought this years ago, but I'm not exactly sure what I have, right? So we want to just create clarity and get rid of the confusion on what they are, because some people, they don't know what the surrender schedule is. They don't understand how the interest is credited. They don't know if they have an income rider or a death benefit rider or any kind of riders, and they aren't sure what fees exist. So if you're confused, again, just reach out, 386-320-6406, and we can get the conversation started. Now, annuities are very common and they're very popular planning tools, but they are often misunderstood. And my job isn't just to sell annuities, it's to help people understand about the ones that they already own. So again, 386-320-6406 if you want that complimentary annuity checkup. So if you own an annuity and you're not 100% clear on the ins, the outs, and the fine print, just give us a call. Let's sit down and we can have that discussion and really just educate you on the decision you either already made about to make or may make in the future. So the first segment here is going to be, what is an annuity really? What is it? So my objective is to educate and remove some confusion around the topic. Now, today we're going to keep it somewhat simple and really just talk about two different types of annuities that exist. One is the fixed annuity, and one is the fixed indexed annuity. So starting back with the first one, the fixed annuity, the easiest way for me to be able to make the comparison, Matt, is it works very similarly to a CD that would be issued and given to you, sold to you at the bank. So fixed annuity, where it differs though, is that it's backed and insured by the insurance company who provides you that contract. Now, similar to a CD, it's going to provide you a guaranteed fixed interest rate for a guaranteed amount of time. So a CD, you may have 6 months, 12 months, 18 months, 24 months, and that's kind of the verbiage that the banking industry uses. Whereas in the annuity and insurance company world, they look at their periods as years. So maybe it's a 2-year, a 3-year, 4-year, we're using years instead of months. The principal, just like a CD, is protected and the growth is predictable. So it can't change and will not change during that guarantee period. So let me give you an example. Let's say that you owned a CD and you had a 6-month CD and you just kept renewing it 4 times over, right? So what you've really done is just bought a 2-year CD. So 6 months, renewed it for another 6 months, renewed it for another, renewed it for another. You've done 4 6-month CDs. And what we often see is that after that 6-month period, you're subject to the new interest rate that's provided by the bank. Whereas if we know that those funds are okay to be in a contract or kind of, put away for 2 years, why would we subject ourselves to risk rate, the rate going down over that 2-year period as opposed to just doing a 2-year fixed annuity? Because during that 2-year period, the rate's not going to change. Doesn't matter what the Fed does, doesn't matter what's going on in the economy, you are guaranteed that rate for that 2-year period, kind of as an example. So that's the first type, is the fixed annuity, which is easily understood and predictable. Now, some differences there is that during the period of time you're with the insurance company, you actually have the ability to pull out funds from the contract, and those funds earn interest on a tax-deferred basis. So you're not going to receive a 1099 at the end of the year like you do from the bank CD to owe interest or owe taxes, on the interest that money accumulated. So if that's something you're considering, maybe you're in the middle of shopping CDs, give us a call, 386-320-6406, and we can shop some of those options. Or again, visit the website at planretirementyourway.com. Now, the next type, as I mentioned, we're going to discuss are indexed annuities. So those contracts, again, they're protected by the insurance company. The principal that you put into the contract or the annuity is protected from market loss. Now, you tie the interest that you earn in that contract to a market index. So whether that's the S&P 500, the Dow Jones, again, these are some very common ones, and the most popular one to follow is the S&P 500. Now, again, you're not directly invested in the S&P 500. However, you do earn interest based on the performance of that index, subject to your caps, your spreads, and your participation rates, and we're going to cover those a little bit later. So again, it's a way to kind of look at a way to earn interest as opposed to the traditional fixed route of the fixed annuity. So some common misconceptions are, they're all the same. Well, I can promise you they're not all the same. They're tied directly to the stock market. They are not. So in periods where the index that we choose declines, your principal is safe. You're not going to lose any money. And they're too complicated. And that's kind of the point of the show and the point of these consultations is if you feel as though they're too complicated, that just means that they weren't properly explained. And that's our biggest, reason for meeting is let's make this easy. Let's make it easy to understand. So an annuity can be very simple or very complex depending on the design, which is why reviewing what you own matters. So if you'd like a clear breakdown of your annuity in plain English, call 386-320-6406 or go to the website planretirementyourway.com and schedule your complimentary annuity checkup. So Matt, based on those couple openers there, what opinions or what thoughts do you have on that before we go into segment 2?
Yeah, no, I'm so glad that you're doing this because I do feel like there are so many misconceptions out there about annuities because so many people think of annuities as the old school type of annuity contract, which is from years or decades ago, where you gave the insurance company money, then they started giving it back to you in installments, but then you had to pay a fee for the privilege of getting your money back, and there was basically no growth. And then if you died, then they kept the money. There was no death benefit or anything like that. So those are kind of the old school annuities. And there are also some different kinds of annuities that still exist that we're not kind of going over, which people may be thinking of when they say beware of annuities and that kind of thing. But I would say no. My whole thing is don't beware of annuities. Like be wary of anyone who says beware of annuities because they either don't know what types are out there right now, or they're trying to sell you something else that may or may not fit into your plan. And that's really what it is all about, is what fits in your plan. And you operate in a fiduciary capacity, so you have to act in the client's best interest when you work with folks.
Right, Matt, I agree. And hearing something to be aware of is that makes me more curious. That makes me want to go out and actually learn more about it. So, the next segment here is the ins, the outs, the fine print. And, the ins are going to be referring to the benefits that people may not realize that they have. So there are annuity contracts that have guaranteed lifetime income riders. So if part of your planning, and we always mention on the show income planning, is let's say you have Social Security and you've got your retirement dollars, but you don't have a pension. Well, an annuity is the only other guaranteed vehicle to replicate a pension payout in the fact that it will pay you that income for as long as you live. If you're married, that income payment can be passed to your spouse. And if both of you pass away or you pass away, whatever's left in that annuity is going to be payable to the beneficiary that you do choose. So you don't give up the asset. You're not trading the asset for income. You're simply utilizing that vehicle as a way to create predictable income as you navigate through retirement. Now, you could be on the side of, well, you've got income, you've got pension, and maybe you want to leave a legacy. So one of the benefits you can add on to the annuity is a guaranteed death benefit rider, which is going to increase the amount of legacy dollars that you create in your plan to be able to pass on to your spouse or your loved ones. There are some annuities that offer an upfront bonus. Now, sometimes we utilize that bonus to get people out of an older annuity that may be underperforming, have low rates, have high fees, and maybe you're still within that surrender period. And sometimes we can utilize that bonus to pay back the penalty to maybe get an annuity that's more suitable for your needs. And when it comes to the payouts, we can have it be adjusted by the inflation, and we can also continue those payments to your spouse. So those are some of the ins, some of the benefits that people may overlook or they may not know about. And some of the outs, right? So some of the outs is, yes, you're committing to a contract with an insurance company. And if you cancel that contract early, there is something called a surrender charge, or you have a surrender period. And as long as the person putting the money in the annuity understands that, if I close the annuity, I'm going to pay an early withdrawal penalty. The reason they charge those penalties is so that they can offer you all the benefits that we just talked about a moment ago. They sometimes and often have credit limits as far as, well, what if the S&P does 20% and I may have a cap of 10%. Well, the cap or the limitation there is simply because in the down years or the negative years, you're not going to participate in the negative. So there's got to be a little give and take at some point. And if you withdraw more money than the contract allows, there's a penalty for that. So again, these are trade-offs. So you can't always just have the good without having something to talk about as a trade-off. So those would be the outs or the limitations. And then the fine print is going to be, what is my cap? What is my participation rate? And oftentimes when we do these annuity checkups, we shop, well, maybe you bought the contract 3, 4, 5 years ago, and the rates that are being offered now are far more favorable to you than they were back then. So that could be a potential reason to exchange that annuity for a newer one. And what are the rider costs that you're paying? So do you have an income rider? Do you have a death benefit rider? Do you need that rider? Right? Sometimes these riders are added onto contracts to clients that don't need it. And we sit down and we do the review. We determine, well, you don't need this income or you don't need these legacy dollars. Let's look at maybe a potential option where you're paying less fees and get rid of those unnecessary costs, which is dragging down the accumulation of that annuity. We can clarify what your income base is versus your account value, right? So there's things that people, get into with these contracts that they may not understand, or maybe the person that put you in the contract explained it one time and they didn't do the annual review or the annual reallocation. And, that's something we do. Oftentimes I meet people that have annuities that the person never reallocated the money. So you can change between different indexes, you can choose different fixed accounts, and that should be an ongoing service. And sometimes we provide those services to people that I didn't even put them in the annuity. I simply just want to help them maximize their plan and maximize their retirement. So sometimes people own something that fits perfectly into their retirement plan. They just don't know how to use it properly. So, and other times they were sold something that doesn't align with their goals anymore, and we can help them understand their options.
Yeah, that's absolutely right. I think that is clarity can lead to so much peace of mind. And, if you have an annuity, if you're listening to the show and you have an annuity right now, and you look at a statement or you log into a website like Portal for it, and you're just kind of confused, it's a little bit overwhelming, you don't know exactly what you've got. Well, that is exactly why AmeriLife offers the annuity checkup. And Retirement Your Way with Bradley and Madison Hardin, of course, is the show that we're doing right now. AmeriLife is kind of the larger entity that we're affiliated with around here. But if you want that annuity checkup, I would encourage you to do that, especially if you have one now and you don't quite know what in the world you've got. 386-320-6406. That's 386-320-6406. You can also go to planretirementyourway.com. That's planretirementyourway.com. And you bring the statement. You can walk through it together with Bradley, his wife, Madison, the team there at AmeriLife as well. We'll be glad to walk you through. And it really is, such an important thing because, as you said a minute ago, Bradley, people might have something that fits into their plan perfectly, but they don't know exactly how to use it. They don't know what features might be good for them. They don't quite know which way is up and down or sideways about it because it can be confusing. But what you do is you clarify things for folks. And I think that's very, very powerful.
Right. No, and I agree, Matt. Thanks for saying that. And the idea is these are complex, could be a complex contract, could be simple, but it's something that we study. I've been studying it for, almost 15 years. I've been with AmeriLife here locally in Daytona Beach, Volusia County, Flagler County. And, this is something that we talk about every day, and it's probably not something that you talk about every day, right? So you may get your annual statement, your quarterly statement, and be a little confused and just kind of put the mail to the side and move on with your day. And I understand that. So that's kind of why we like to have these consultations and these meetings to help make it easy. Now, Matt, the last part here is where annuities fit in a retirement plan. So some ways that you can look at it is it's simply a tool to satisfy a job, right? An annuity is not supposed to replace your entire portfolio. It's supposed to be part of the plan, right? It's a way to manage risk. It's a way to create predictable income. And it's also a way to hedge against the longevity risk. And simply put, the longevity risk is living too long, running out of money, having to become dependent on my children or the government. And if you've built this nest egg, what an annuity can do is ride out the longevity risk. And so those are what they are. And what they are not is a one size fits all solution. So each job requires a different set of tools. So every client or every prospect we meet with, that's a different job. And so we utilize different tools to be able to, complete the job. So we don't recommend the same company, the same plan, it's not a blanket statement. And here at AmeriLife, we've got access to the majority of the top rated carriers in the country. And we can show you all those options on one screen. They are not a replacement for diversification, and they're not designed to beat aggressive stock portfolios. So I do dinner seminars, and again, you may have gotten one of my mailers. And I emphasize that in my conversation is that an annuity is not designed to beat the market. It's designed to provide a safe place for people to ride out some of the risk or ride out some of the longevity risk that you may face for living too long. So, because that's and what we emphasize here in our plan is utilizing the 3-bucket strategy. So again, we're not saying put all the money in annuities. And maybe you probably shouldn't have all of your money in individual company stocks and equities, right? That's very risky. So, the 3-bucket is you got to have 1 bucket for protection or short-term investments, money you can get to. You need to have a bucket for income. So this bucket is going to provide me stable income throughout retirement. And then you need to have your growth bucket, right? So that growth bucket could be made up of equities, a full stock portfolio. And our job is to try to identify how much should be in each bucket, right? How much income do we need in the income bucket? That's where the annuities fit in. That's where they're going to provide safety, security, and not outliving your funds. So a properly structured annuity can allow someone to take appropriate risk elsewhere because a portion of their income is protected, right? So when you get to that pre-retirement, retirement, whether you're just started, you're in it, or you're going through retirement, the idea is cash flow. And so if I know that my income is protected, it's guaranteed, I may be able to take a little bit more risk over in my equity side of my portfolio to be able to keep up with inflation or potentially outpace inflation, right? So it's not a one size fits all, and it's not a solution for the entire portfolio. So, we don't recommend annuities blindly. We evaluate whether they serve a purpose for you in your retirement plan. So if you're approaching retirement, wondering whether an annuity belongs in your plan, or whether the one you already own still makes sense, give me a call, 386-320-6406, or visit planretirementyourway.com to request your complimentary annuity checkup. And again, we always emphasize that phone number, that's going to come directly to me, right to my cell phone. As any person nowadays, that thing is attached to the hip. I can actually see it right now as we're recording. So you're not going to get a call center. You're not going to get bounced around to some other person. You're going to get me. And if you visit the website, that inquiry is also going to come directly to me. AmeriLife's not going to take that information and give it to somebody else, right? This is specific to us and to the program. So Matt, let's take the last couple of minutes here and kind of tie everything together, right? So annuities are very common and they're widely used. However, they are often misunderstood. Many people own them without fully understanding. But if you do understand them, then that's going to reduce anxiety, and clarity leads to better decisions. So some reflective questions you can ask yourself is, do I know my surrender timeline? Do I understand how my interest is calculated? Do I know how my income rider works? Do I know what happens if I pass away? And does this annuity kind of still align with the goals that I had when I bought it and the goals that I have as I move forward? And the idea here is our goal is simple. We want to make annuities easy to understand.
That really is the goal. I mean, even, on the show and when you meet with people one-on-one, I know it's like to make different concepts, because we'll talk about different, financial topics on each show. Today's been spent on annuities, but it can be a confusing topic. So clarifying that, clearing up any of that confusion, the misconceptions that have been out there, that's just such a powerful thing. And then when you meet with somebody one-on-one, you can say, okay, let's take a look at what your specific situation is. Then let's determine if an annuity is right for you, and if so, which one. Because as you said earlier, you've got access to all these different top-rated carriers that all have different annuities, different types of annuities, and all the different ones have different features and all of that kind of thing. So you can help navigate that sort of, I guess, just the very confusing annuity landscape out there. So I would really encourage folks, go to planretirementyourway.com. It's planretirementyourway.com. That is the website. You can fill out the form there and request a time to meet with Bradley and Madison Hardin with AmeriLife. 386-320-6406 is the number. 386-320-6406. And Bradley, as you said, that comes right to you. Well, it'll ring right on your hip or right in your pocket or wherever you keep that phone as it's attached to you at all times, right?
Yeah, no, absolutely. I don't think anybody, that's the first thing I look for when I'm going to leave the house is, I got my phone on me, because that phone's going to tell me how to get to my next meeting. All right. So again, guys, we do appreciate your time listening to us today. The last thing here, just if you're thinking about it, if you're concerned or you're worried or you want to kind of clarify that term annuity, let's meet, let's talk, let's schedule that annuity checkup. We'll go through the ins, the outs, and the fine print. So that way you can move forward with confidence. Thank you, Matt.
Thank you. And thank you for listening so much to the show. Really do appreciate it. You are the reason that we do this show. So appreciate you listening as well. We'll see you next time for another edition of Retirement Your Way.